Falling values spread to 40% of Australian houses and units, and we're seeing this across the board with the market downturn gathering momentum, consecutive rate rises, rising inflation, weaker consumer confidence. So we're going to run you through what this pressure looks like across housing values. We've got an interactive map. We're going to look at every state around Australia from Perth, Melbourne, Sydney, Adelaide, even at Australian Capital Territory and Northern Territory. Let's dive in and look at it from the top and see what's going on. So what are we actually looking at? So we're seeing falling values spread to 40% of the Australian housing unit and housing market. So what does that actually mean? Well, we're seeing the downturn gathering momentum, as we've talked about earlier, multiple rate rises, rising inflation, weaker consumer confidence. And today, 41% of housing and unit markets across Australia for the June quarter have recorded a decline in value. Now, this has been a significant increase from the first quarter of the year, where we saw, in comparison, 23% of markets record a fall in value. So we've seen nearly a doubling of sorts from 23% to 41% in the June quarter that just ended. CoreLogic, they've got some really good information on their analysis. They've got a methodology that is actually widely used by economists and institutions nationally, where they looked at 3,085 capital cities, houses and unit prices, and they analyzed the national sort of details and gave us a sort of quarterly and annual analysis of the figures. And I'm going to go through this map in a minute, where they've done the numbers and they've crunched them. What they've looked at with those 3,085 capital cities and suburbs, they've looked at suburbs that recorded more than 20 sales in the suburb and no less than 100 valuations that were completed. So we're going to cover this report in a moment that has all the details with Sydney, Melbourne, everyone else. And we'll go through some understanding of the change in value over the last 3 months. We'll look at the median values of the properties and all that sort of stuff, and also go through a bit more of an analysis as to what's happening in each of the capital cities. But we did see that Caitlin Enzi, or Easy, said that the updated data showed a significant uptick in the proportion of declining markets compared to the March quarter, which we talked about earlier. And these values were predominantly seen in Sydney and the Melbourne market. So we're still seeing that, where Melbourne and Sydney are really leading the way. That's mainly due to the affordability. We generally notice that the higher cost areas are the first to start to go backwards. And equally, Melbourne and Sydney quite unaffordable in a lot of the closer to the capital city areas. This data captures 2 of the 3 recent rate hikes. And it's not surprising that we've seen an added downward pressure as the broader impact of the housing market is starting to really feel a pinch with these rate rises. That's, yeah, definitely fair to say. And I mean, coupled with inflation and weakening consumer confidence, it's to be expected. We talk about the market going through a cycle. I guess it's just the next part of the cycle. We've seen a peak, a massive peak, where properties recorded 20, 30% increases in some instances. And now that's starting to come off the boil, and we're moving to a declining market here. Now, the signs of the slowdown were already evident before the rate rises, but has become more widespread across Sydney and Melbourne, and beginning with the impact of the more expensive areas of Brisbane, Canberra, and Hobart. Now, historically, Ms. Easy goes on to say premium suburbs are the most volatile rather than the most affordable suburbs, which makes sense. The values shoot up much faster and with an upturn for the more expensive properties, but they're also the first to go down in a declining market. Now, we do have CoreLogic's home value index, which we'll touch on in a minute. I did want to go through this interactive map and what it really means for everyone in different capital cities. So we'll start off with Sydney, go through Melbourne and the rest. Looking at firstly the median value of the Sydney area. As we can see, they talked about the higher the prices, the more volatile. And we can definitely see that here, where in a lot of the suburbs closer to the city, up in these areas here, Chatswood and all these other areas, Ryde, and all these other areas, they're going in around that 2.25 and above, which is just crazy for property value nowadays. And there's really nothing in that affordability piece. If we look at that $750,000 shading, I can't really see anything there that would give us an idea. Median value, around that 900,000, even quite far from the city CBD. And it really makes it a challenge from that affordability. Now, if we look at the medium change, as we can see in the last 3 months, a 7% or greater reduction in value is in the same sort of areas where they recorded the high value. So it's interesting to see such a large reduction. And even if we look at the quarterly change for New South Wales, they went backwards by 2.8%. Now, moving on to the Melbourne market, if we have a look here at a very similar sort of a covering, same thing with the map, we see the affordability in a city, in a ring of the city, is quite excessive. It does look like there is a little bit more affordability than Sydney in some of the outer suburbs of Melbourne, around that 700, but that's still quite elevated. Like 700,000 for a property isn't exactly cheap nowadays, in comparison to some of the other capital cities like Perth, Adelaide even, where you can get a bit of value for that 700-ish mark, but not a lot in Melbourne. Now, we are only looking at houses here. I mean, if we look at units, units have fared a little bit better, but as you can see, houses are definitely feeling the brunt of all the happenings. Same with Victoria. The last quarter, we saw a negative 1.8% reduction in the values of the capital city. Let's have a look at Brisbane and what that looks like. Brisbane's slightly more affordable. As we can see, the darker shaded areas aren't so relevant, but they did say the more expensive areas of Brisbane, Brookfield, Pullenvale is quite expensive, Samson Valley, Cashmere, and have a look here, Ascot, they are starting to go backwards, but we still see a little bit of affordability in around, still 900 is quite high, but in around those further, 20 sort of kilometre radius of the city, people can still get properties around that 600,000 to 700,000. Now, the main thing is with the property value change, we really only see Fairfield as having a biggest reduction. It fell by 5.6%. Gordon Park a little bit there as well, and then Geebung. So we can really see that Brisbane has some pockets in which is being affected, but then it looks like there's some pretty strong growth, Ellen Grove and other areas that are further out from the city, where maybe there's an arbitrage. People see that Ellen Grove area for 535,000, being it so close to the city, might be something seen as a good buy and a good steal, and that's why there's been so much growth. And we saw that with Perth. We did a video on that recently, where they recorded up to 120% in growth in some areas, just because that affordability piece was right smack bang what people were after. Moving on to the next one, Adelaide. Now, Adelaide has recorded some strong growth. We've seen in the capital city there a 5.1% growth in Adelaide for the last quarter. To go on Brisbane, where we just covered 2.7% in comparison. So still some pretty strong growth for the quarter. But as we can see here with the declining areas, Adelaide's still faring pretty well. It looks like there's some neutral areas that isn't seeing as much of growth as potentially other areas, but some pretty strong areas. McLaren Flat, 10%. Once again, I dare say it might just be really due to the affordability, 297,000 in a lot of areas. That's very affordable in comparison to the bigger capital cities, where you're seeing for similar areas, properties going for that 2 million mark. So we can see Adelaide's still in fairly good shape. Moving on to Perth, they recorded a 2.1% increase in growth. And as we can see here, right on the waterfront side, quite expensive here in places like Swanbourne, City Beach for Perth, and still fairly competitive. You can find areas in Perth where you're getting around that 400,000 to 500,000 mark, still quite close to the CBD. And when we look at their rate of change, they've only really had one area that's gone down by 2.2% for the last quarter. Actually, another one here fell by 1.2%. So there were a few areas that were softening up. But overall, it looks like the market there is still moving pretty strongly. It'll be interesting to see how these results for all these areas play out for the next quarter, particularly as we're seeing probably another 2 more rate rises coming through for August and September, if that's going to have much of an impact. Once again, looking at Hobart and the affordability, quite expensive close to the city, but still some areas that you can get some reasonably priced properties, and their overall decline in growth has been a little bit more widespread. So we can see that here in certain areas where they've had a bit of a adjustment, but we did see Hobart as one of the areas that recorded massive growths previously. They've gone backwards as a capital city by 0.1%. If we look at the annual change, they recorded a 22% increase in growth in the regions and a 13% for the capital city for this year alone. And, we can get an idea of the median prices in Tasmania as being quite high in, for a small sort of city. Moving on to Darwin, once again, the affordability looks like it's probably one of the more cost-effective cities across the nation. And once again, a couple of areas that are starting to show a fall. There's a 2.3% increase in growth for the quarter that just passed. And then what's next? We've got Canberra as well. Same thing. Again, we're getting a bunch of different data there, and some areas that are starting to record a decline there. Now, going back to having a look at some of this information here, we know that the growth conditions across Sydney had weakened significantly over the period, with house prices falling 3%. Although 81% of the houses analysed recorded a fall in values over the 3 months of June, 3 out of the 4 suburbs actually still have a median value of more than $1 million. And that's the key. The key driver is the fact that the premium or the higher cost property values, as rates rise, people's affordabilities are getting less and less and less, which makes it more of a challenge to secure these purchases, because we know that credit and the ease of credit is quite highly correlated to the value and the cost of properties. It also goes on to say that, the relative affordability for Sydney's units, the market for units in Sydney was slightly more resilient. So they didn't see as much negative growth for the unit market as the housing market, which it still went down by 2.1% in comparison to the 3% there. Now, almost 2/3 of Sydney units analysed had a median value of 500 to $1 million, and while 30% recorded a median value above $1 million, 19 areas recorded a median value below 500,000. Now, what we do know as well, going back onto the rates, what we were talking about a moment ago, the Reserve Bank factors in, for every 1% increase, they expect property prices to decline. I think we talked with Martin North in the past. His analysis said they expect about a 30% reduction in growth. I'm not sure if it's exactly that much. If we have a look at some of these areas where we saw a massive increase in median values across the year and the annual change, even if prices go back 10, 20, 30, 40%, last year there was massive growth. So it's sort of just evening it out and becoming more affordable for those that were locked out of the market last year. Now, the slowdown in Melbourne, especially the inner east, has become further widespread, with 80% of the city's markets falling in value over the quarter, whilst among 60% for units having a reduction in values. Now, Ms. Easy also talks about units nationally have proven to be slightly more resilient than houses, which is largely coming down to the affordability. Units in some more expensive areas, particularly inner city areas, have started to decline nationally as fewer unit markets, fell down in the quarter compared to houses. Now, what we also do know is inner city units can be a struggle for some borrowers, especially if they have a minimal deposit in getting their loans across the line. So that might also have something to do with that being more of an area that's declining, because as lending tightens up and it becomes more of a challenge and people have less of a deposit, that really plays into the mix of the inner city areas struggling for people to secure finance, which reduces the values. Now, it says, while conditions in Brisbane remain positive, signs of easing are evident. we saw an 11% fall in the quarter. And of the suburbs analysed, 120 recorded median values in excess of $1 million, up to 33%, which was up from 33% from the previous quarter. So as we can see, the values of the Brisbane market increasing a little bit there, where we're finding more properties over that $1 million mark. That also has a lot to do with the interstate migration. We've seen Brisbane have record levels of interstate migration, people from Sydney, Melbourne coming cashed up, selling their property and really entering a market where they see quite affordable, properties still around that $1 million or just above $1 million, close to the city, where traditionally you don't really see that in those same areas that they've come from. Now, only 10 of the 180 suburbs in the Brisbane unit market declined in value over the quarter. 4 suburbs from Logan to the Bow Desert region are among the most affordable, and they recorded a median value of $250,000. Now, that's pretty cheap. The Logan and Bow Desert region is still within maybe 40 to 50 minutes from the CBD. So to get something of that sort of a value is still pretty good from that point of view. Adelaide had the strongest quarter of growth of house values among the capital cities at 5.1%. It talks about Henley Beach South was the only house value that was down by 1%, and was the only housing market to decline during the quarter. Now, Adelaide also recorded the strongest growth for the past quarter, having shown easing in the quarterly rate of growth since February this year. And we saw that a little bit earlier, whereby, the quarterly change with Adelaide still quite strong, and it might be potentially coming down when we look at the analysts and numbers. Now, moving on to WA, where they only opened the borders in March. Perth house values surged 2.2% over the 3 months up till June, and fewer than 20 markets recorded a decline in value from June. Perth's housing values remain at the lowest of any other capital city. We talked about this earlier. We have another video where we talked about Perth housing market and the values increasing. We saw some suburbs increasing by 120%. And I think that affordability piece is really one of Perth's key drivers in that you can get properties at 10 kilometers of the city, and you're still getting some decent value there. Like if we're looking here, 500,000 in an area like Belmont, and that's still pretty close to the CBD there. Now, looking at Hobart, whilst there were housing values declined by 0.5%, with the median house price now $796,000, the June quarter, with more than half of the markets analysed recording a fall, and then 3 of the unit markets fell in the same period. So Hobart's still going pretty strong. Darwin had an increase of 3% for the June quarter, and it takes its median values to $588,000, with only 2 suburbs recording a decline and unit values increasing by 1%. And then we saw Canberra here as well increase by 1.2%, with a quarterly median value of $1,065,000, with only 2 of the 83 suburbs analysed having a median value that was less than $750,000. Now, we saw a bit of softening in a handful of houses and unit markets in the Canberra quarter, but there's been no annual fall that had recorded. So yeah, that's what it looks like from a numbers point of view. We also start to see auction clearance rates soften up. Auction clearance rates are a good understanding of what the market's doing. So we've seen the 6th consecutive week where combined capital city premium clearance rates have fell below 60%. We can see that compared from year on year. Last year, they're in the 70s, and it just shows that the demand is dwindling. And what that means is prices, as a result, are starting to soften up. To be expected. Here at Hunter Galloway, we help home buyers get loans approved. So if you need help with anything from refinancing, buying an investment, buying your first home, we can certainly help. We're based in Brisbane. We're mortgage brokers. There's 0 cost for our service. We take care of all the details, and certainly would love to have a chat. Give us a call on 1300 088 065, or visit us at huntergalloway.com.au, and we'll see you next time. Leave a comment below. We'd love to know what you think, what you'd like us to talk about next, and we'll talk again soon.